Hello, family. Welcome to this property market update for Gladstone. Good old Gladstone. Now, if you are looking to invest in regional Queensland on a market like Gladstone in 2025, then this video is for you. So I'm going to jump in and basically diagnose and temp check exactly what's going on in this marketplace right now by looking at the point in time data around supply and demand and looking at a bunch of trends and patterns and basically try and assess what's likely to happen in 2025 and beyond. So you can figure out, hey, should I pull the trigger here in Gladstone this year and get into the marketplace and make some money? Now, if you are new to the channel, these videos go for roughly about half an hour. I'm going to try and make it a lot quicker than usual. Sometimes I like to blabber on a little bit too much, so I'll keep it rather short, sharp, and punchy and give you guys just the information, I suppose, the gold nuggets that you need rather than ramble on. And then if you are a current subscriber, welcome back. I really appreciate you as part of the Life Buyers Agency family. Cheers. Now, if you are an existing subscriber, I'm sorry I have to put you through this again, but for those who are new to the channel watching me for the first time, my name is Troyson Bassani. I am the owner and head of research of Life Buyers Agency. So Life Buyers Agency, we have two subsidiary brands that sit under the Life umbrella. So we've got Capricorn Life servicing the Central Queensland region, and we've got Tropical Life servicing the North Queensland region. So basically we can represent you on the ground in all of these markets in Central Queensland, Rockhampton, Bundaberg, Gladstone and Mackay, and we provide boots on ground service. So a lot of people are generally buying into these markets from interstate or inter-region, and they tend to rely on us for a lot of that local market knowledge to find them the better quality assets, to give them access to pre and off-market deals in isolation of competition, and yeah, just all round make their investment experience and journey a little bit more pleasant. So yeah, we're able to provide that as a service offering in these locations in Central Queensland. You can visit us on our website, give us a call on that number, book a call with myself, one of my team members, to see if we might be able to potentially give you a hand, particularly if you are struggling to buy. And even after this video, if you feel as though, oh, I still don't know where to spend my $550,000 pre-approval, then yeah, at least have a chat with us. We might be able to at least try and point you in the right direction or offer you, something that potentially add value to where you want to go. Now, as I said before, I'm going to be looking at a series of data to go in and diagnose and temp check what exactly is going on in the marketplace of Gladstone and analysing the point in time data around supply and demand, and then analysing its trends and patterns to basically make some assumptions and predictions around what's going to happen going forward in 2025 and beyond. So basically, I'm hoping at the end of this, you'll have a pretty clear understanding of whether or not you should be buying in Gladstone right now, whether it's the fit for you based on what the data is telling us right now. So just quickly, I'm going to go through each one of these now just so you understand when we get to the point in time of me discussing these various data points, you know what we're covering off on. So I'm going to be looking at first and foremost the median house price change. So what exactly is going on with the median house price? Is it going up? Is it going backwards? Is it plateauing? And then what is the median house price then likely to do going forward in 2025 based on a bunch of qualitative and quantitative viewpoints that I'll be putting forward there as well. And then we're going to look at the demand and supply side of the market. So look at things like listing volumes and inventory levels to get a gauge on whether or not supply is low, because that's one key ingredient to capital growth. There's obviously low levels of supply. Then we're going to peek out over the demand side of the market and look at things like days on market, absorption rates, vendor discount, to get an idea on the demand side of the market. And what we want to try and hopefully establish for investors is that there is an imbalance between supply and demand, which causes marketplace friction and house prices keep moving. So we're going to use those metrics to uncover the marketplace today and unpack these key parts of the market. And then we're going to have a look at the rental side of the market. So I'm going to be diving in, looking at the vacancy rates and the median rental changes as well. So you can come in and capitalize on a rental market where there is upside as well. It's not a rental market going backwards or plateauing. So I think that's another important part of the equation when you're buying an investment, is making sure you're buying the right rental market as well, because you obviously want people paying for your investment through their rents. Now, and then lastly, we're going to finish off with new supply information around what does that look like in Gladstone. Obviously, supply is the enemy of capital growth. We don't want to be in a market where there is an imbalance now, but in 2 years' time, there's a massive supply pipeline, which could mean trouble long-term for your investment. So I want to understand what the supply pipeline looks like as well, and I'll speak to some data around that as well, and then I'm going to make some predictions and summarize my thinking at the end there for you guys as well. So yeah, stick around, guys. Let's dive in. All right, let's start off by looking at the median house price for Gladstone. So we're going to have a look at what the last 12 months has done, what it's likely to do going forward, and what it has done over the last few years as well. So let's have a look at this median house price now. So we can see here that the median house price in Gladstone as of February 2025 is currently $692,000, and it's up from $571,000 in February 2024. So essentially, we've seen the median house price grow by 21.1% in the last 12 months. So there you have it, guys. Gladstone has done double-digit growth over the last 12 months. And if you actually go back and watch my market update I did on Gladstone last year, I was very much predicting this to happen because all of the stars were aligning and the data looked very, very good for Gladstone. And yeah, if you invested 12 months ago, you certainly would have made some decent quid. But I know many of you are watching this today looking at potentially investing in the market now. So you want to make sure that there's still potential upside in the pipeline here for you. Now, if we just quickly look at the last couple of years before we dive in and make some assumptions around what it's likely to do going forward. So we can see, going back 10 years, it was down in the dumps. Gladstone went through a major crash, and then it went through a recovery phase there, and then it really flatlined for a number of years. And then going back 4 years, the market started to incline there. And I think a lot of that came back to a lot of the changes that were happening at a local government level. A lot of things changed with the different types of employers and the different types of industries that now occupy the Gladstone region. And then we started to see economic diversity, population diversity, and then obviously once that economic diversity took place, that then starts to trickle down into the housing markets. And we certainly see that in full effect now in Gladstone. Like, it's not the same town as what it was going back 10 plus years. It's a totally different economy now, and it's a totally different vibe altogether. And you can ask any Gladstone local that right now, and they're going to vouch and say the same thing, basically. Now, in 2025, if you are looking to invest in this market, I've got a couple of points around this median house price. I think the first point is that what I don't like, and this is my own personal opinion, is that the Gladstone median house price is a little bit abnormally high for a town of its size. So Gladstone has roughly about 60,000 people, but when you actually compare it to its other regional neighbours like Bundaberg, Rockhampton, Mackay, and Townsville, all of those other regional hubs are actually a lot bigger than Gladstone, yet Gladstone has a higher median house price point right now. So that is a little bit of a concern for me. I do think as a smaller market, it is outperforming itself, but one of the things that tends to skew this data a little bit as well in Gladstone with this median house price, particularly when we aggregate the data, is that it's bundled in there with a market called Agnes Waters. So Agnes Waters is a part of the local LGA for Gladstone. So then its median house price gets bundled in there. And if you know Agnes Waters, and if you've been to Agnes Waters before, it's its own little standalone town, very, I suppose, Byron Bay-like, has a lot of high-end transactions. So the median house price in Agnes Waters sits around $1 million. And when you clunk it in with the other suburbs around Gladstone, you can see, if majority of the suburbs around Gladstone are selling for, have a median around 500 or 600, and then you all of a sudden throw a median of $1 million in there, it drags up that average. And that's how the median house price is calculated. So I think that median house price is abnormally high for a small hub, but that's because it's largely skewed by Agnes Waters. If you took Agnes Waters out, I think the median house price would be around that 600 high fives, which I think where it potentially should be. So that's the first point I wanted to make, right? Now, can I see this median house price growing in the medium and short term? Yeah, I do believe so. Particularly if you take out Agnes Waters, right? Take Agnes Waters out of the equation and you look at this median house price around that sort of $500,000, $600,000 price point. I do think that a lot of people in Gladstone still have the capacity to push this median house price up to around that $700,000, $750,000 median, just based on incomes alone. So then the mortgage to income ratios, I think, have the ability to push up to around that 700, 750 median house price for Gladstone in the near future. So I do still see growth in the short term in a market like Gladstone, providing the supply and demand side metrics look really good going forward. So there is low levels of supply and high levels of demand. I can still see this median house price kicking along, but I do see it potentially hitting a ceiling in and around that sort of maybe 750, 800. And yeah, just be mindful now if you are going to go into this market, like do your individual research, because there are certain suburbs that are a lot cheaper than this median, certain suburbs that are a little bit more expensive. So you have to treat everything on a case by case basis as well. And for the most part, like if you look at all the blue chip areas like Glen Eden, Kincora, New Auckland, Clinton, parts of Calliope, Tannum Sands, parts of South Gladstone, like those blue chip areas where you can buy the conventional 422 brick home on 600 square meters, you could have bought those roughly around 450 to 500k last year. Now a majority of those are pushing into the 600s and low 600s, and the more premium quality stock is pushing up to around that mid sixes. So you just have to remember that, yeah, it'd be very hard to target those blue chip conventional 422 properties now and get them for under 550. You're most likely looking at spending a little bit more than that, and for the really good blue chip areas, you're pushing up into that 600, 650. But I think there's a lot of good opportunity in and around some of the neighboring suburbs to those blue chip areas. You can still buy affordable property there. And then if you look at the 3-bedroom, 1-bathroom configuration, or the 3-bedroom, 2-bathroom configuration in a lot of those blue chip areas, I think a majority of the buying is still around that 450, 550 mark as well. So I'd be definitely targeting those ones. I think you see those properties having really good upside in 2025 and beyond. Okay, so we've had a look at that median house price trend. Now, one of the things I mentioned before is that in order for there to be sustained capital growth or house price growth in 2025, we need to see low levels of supply and high levels of demand. Those are the recipes, the ingredients we need for the market to sustain itself going forward, and for you as an investor to come in and capitalize on, right? So we start off by looking at the stock levels here now, looking at the supply side of the market, and basically all the stock levels is how many properties are coming on each month, right? And then the lower the stock levels means that the tighter the supply levels are. Obviously, the higher the stock levels means that the supply is high, and obviously you want to be in markets where the supply levels are low, particularly if you are an investor, but it's not so much a pleasant experience if you are a home buyer as well. So yeah, let's have a look at the stock levels now. So stock levels are currently sitting at 0.3%, which means that there are approximately 105 houses currently listed for sale in February 2025. So this actually represents a 30% decrease in stock compared to February 2024. Wow, so that's an interesting finding there, guys. So if you actually look at this graph here, you follow that red circle, that's the point in time of February 2025, and as you can see, there are 105 listings and resulting in that stock on market percentage of 0.3%. Now, the first thing I want to say, first and foremost, is that any market that's sitting under 1 or 2% from a stock point of view is a market that's considered very tight, right? And that is a market generally positioned well for capital growth when you have these low levels of supply. I know there are markets in other parts of Australia where stock levels are sitting at 5, 6%, right? And those areas are going backwards right now, or prices aren't moving at all. But a market like this sitting under 1% is a very tight supply market. And if you actually backdate that black line, you can see there that it's sat under 1% for the best part of almost the last 4 to 5 years now. So Gladstone has really become a market where over the years now it's become tighter and tighter from a supply point of view, and that's become a really key ingredient in the market producing those double-digit growth figures it has of late. Now, it's fallen off a cliff over the last 12 months, so we've seen actually a 30% decrease in supply. So if you actually backdate that 12 months ago, the average listing volume per month would have been around that 100, 150, 120 to 150, per month, and now we're averaging around that 100 properties per month. So it's really fallen off a cliff there, those supply levels. So last year we had double-digit growth and 30% extra supply. Now we've got 30% less supply, and yeah, that could definitely be another key factor, right, in potentially having ongoing capital growth this year and beyond, particularly if demand stays strong. So I'm really liking what I'm seeing here, guys, from supply levels, how they've started to decrease. Yeah, what that means in, I suppose, layman's terms or buying terms is that if you are going to try and buy in this market, it's going to become a little bit more competitive. Obviously, the lower supply means that there's going to be multiple offers, multiple bidders. People are going to be paying over. So just be mindful of that if you are going into this market. And then obviously when you dive into individual suburbs, a lot of the stock levels may vary as well. So what you might find in certain suburbs might have more supply than others as well. So just make sure you do your own individual research from that perspective as well. But in terms of ongoing capital growth now in 2025 and beyond, this is what you want to see. You want to see these stock levels continue to get tighter and tighter. So this is starting to look pretty good, guys, for this year. Okay, so we've looked at the first supply side metric, which is listing volumes, and now we're going to turn our attention to the inventory levels. Now, for those who are unfamiliar with the term inventory, basically all that means is at any given month, how many properties are actually available for purchase, right? And that figure or that total can be a lot different to how many properties are listed each month. So there might be 100 properties listed in February, but only 80 of those properties actually sell. So that means 20 of those properties roll over to the next month. So that's basically all it is the rolling pool of properties. Now, if you look at this graph, it's actually how we actually measure inventory levels is in the form of weeks and months. So basically what that means is if all of the properties on the marketplace right now, if all the agents, stopped listing new properties, right, and the market became redundant, it would take roughly 3 weeks or 1 month right now for all of the properties to basically be sold, right? And obviously the lower that figure means that the tighter the market is from a supply perspective. And obviously the higher that figure is, the less, the more supply the market has rather than less. So that's how it is, right? And for a market to basically be under that, what they call 2 months worth of inventory, is a very good market to invest in. Now, if we turn our attention to Gladstone, we can see here that the inventory levels actually sit at 2 weeks, which is actually phenomenal numbers compared to, the benchmark of around 2 months, which is generally a good market to invest in. Here we have 3 weeks, so very, very low levels of supply. And we can see here that the long-term trend is still sitting around 1 month. So what does this mean? So Gladstone's sitting at 3 weeks. That means that out of all the properties that are currently sitting there for sale, it'll take 3 weeks for all of them to be sold if there was no new listings to come on tomorrow. So we're in a very constrained market here where the pool of properties have become tighter and tighter over time. And as you can see, this graph here, it's been coiling for the last 5 years, right? And it's now down to almost an all-time low, very close to an all-time low, sitting at around that 3-week mark. So all properties will be sold in a matter of 3 weeks if no new listings became available, right? So what I really like about this graph is that it's continuing to trend downward. And if you actually match that up with the listing volumes, you can see that how they sort of align. As listing volumes started to go down, we're starting to now see the inventory pool tighten up as well. So I'm really liking this graph from what I'm seeing. I think this is another good supply side metric that's suggesting to me that like capital growth is still likely here potentially, particularly if demand is high, like because we are seeing low levels of inventory now and low levels of listing volumes. Now, the concern I would only have if you revisit this, if you're not investing right now, but you are revisiting Gladstone, let's say in another 6 to 12 months, come back and look at this graph. And if you start to see it jumping and climbing above that 1 month mark, moving into that 2 month mark, you know there that supply is really starting to increase there, and the market has a lot more choice. And obviously when there is a lot more choice, let's say in a market like Glen Eden, if there is only one 4-bedroom, 2-bathroom home coming on a week, right, around that $600,000 price point, you're going to have multiple bidders bidding for that, right? But let's say in 6 months' time, if you have 7 of those properties come on that are exactly the same and similar price point in that same suburb, you're going to see how it starts to split up the demand, right? Split up those buyers. So you're not going to end up in a situation where you've got that really heated market where that's going to be pushing up house prices. So just be mindful of that and keep watching this inventory levels, guys, if you are looking to invest in a market like this. All right, so we looked at the supply side of the market. We've seen supply trending down, right? Both listing volumes and inventory. Now, that's one side of the equation for potential capital growth in 2025. Now I want to look at the other side of the equation, which is demand levels, right? And one of the metrics we use to assess how strong demand is in the marketplace is days on market. So basically the days on market data metric, all that speaks to is how long is it taking for property to sell, right, on average. And then basically the lower that day figure, right, the day on market figure, that means the stronger the market is. And the higher that day on market figure means the less demand there is in that suburb. Now, I just want to say anything under 50 days or 60 days tends to be what's called a well-balanced market. When you start to move under 40 or 30 days, you know you're starting to move into a very heated market, right? So I just wanted to make that clear for those who are unfamiliar with sort of aggregate numbers across Australia around what's good or bad in terms of benchmarking certain data points. So we can see here that for Gladstone, days on market currently sit at 50 days in February 2025. And it's actually a spike up from the 40-day average throughout 2024. So that's very interesting, right? To now see a spike in how fast properties are selling. For an extra 10 days it's taking now on average for properties to sell. Now, is that alarm bells? I'm not too sure, guys. I think it's still very early to make a call on that, but it is something to certainly consider because we've seen that long-term trend over the last 12 months, sorry, and even for the last 24 months, in fact, where it's sort of sat around that 30, 40-day mark. Now, for it to jump over the last 2 months is a little bit alarming. It's certainly something we'd have to keep our eye on. So what that means for you, I suppose, as an individual investor is that if you are going to buy in this market, you're probably not buying into a complete frenzy as what it was sort of 12 months ago or going back even 6 months ago last year. And that means you might have a little bit more time to potentially get something under offer. Based on this 50-day average, that means that most properties are going under contract in the first, I would say, 10 to 14 days. So you got a 10 to 14 day window, potentially jump on realestate.com, speak to an agent, do your research, and then come back and make an offer. That's what the data is saying here. Obviously, don't take this word as gospel because believe me, individual suburbs, individual properties, they're all different, right? Treat everything on a case-by-case basis because I know this for a fact. I put an offer on a property last week in a suburb in Gladstone and it only went up online like 2 days before and then 2 days after it was already under contract. So just be mindful of that if you are looking to invest here, that treat everything on a case-by-case basis. But yeah, guys, right now, from a demand side of the market, yeah, I would have loved to still see it around that 40-day average because, it sat around that last year and it got double-digit growth. It pushing up now to around 50 days is maybe a little bit of a suggestion that the market is cooling on the demand side. But for me, I think it's too early to tell right now. I probably want to see another 2-3 months of this trending upwards or maintaining that sort of 50-day average before I can make a call on whether demand is slowing down in this market. But we're going to be looking at some other demand side metrics as well to assess whether or not the market is strong from a demand point of view. So if they're all starting to marry up and paint the same picture, then we know potentially that is the market slowing down. So, but for now, day on market is still a bit early to tell if the demand side of the market is slowing down. Now, the next demand side metric I like to look at is the absorption rate. Now, for those who are unfamiliar with the absorption rate, pretty much all I'm doing here is using a fixed period of time, right, to establish how many properties have come to the market and what percentage of those have actually sold, and that gives us an absorption rate figure. And obviously, the higher the absorption rate means that the market demand side is very, very strong, and obviously the lower that absorption rate means that demand is potentially not as strong there. And just for the record, at a national level, any market where absorption rates are around 60% is considered healthy, and I think anything above 75% is considered a very hot market, right, where demand is very high and is above average in that particular area. Now, we can see here that for Gladstone overall, the Gladstone is experiencing a healthy absorption rate of 81%. I wouldn't say it's healthy. I'd probably say it's more in that heated category. Very hot around that 81%. And we've used the data between that January 2025 period to February 2025 period. So the last 2 months, we've just looked at how many properties have come online and then what percentage of those have sold. And actually, if we benchmark that compared to the same time last year, we can see that there's been roughly a 14% decrease from 95%. So if you actually look at this graph here, we've had a total of 203 listings between January and February this year. And then out of those total listings, we've had 165 of those properties sell. So yeah, slightly higher Uh, then last year, as you can see, slightly higher last year at around 95%, but now sitting at around 81%. Look, I'm not too concerned about that 81% figure and it dropping off by 14%. 95% is very, very high, right? That is like last year, this time last year was complete frenzy where everything was basically just being chewed up and swallowed by the market. Now, for it to fall off by 14%, I'm not too concerned there because it's still averaging around that 81% now over the last 2 months. So 81% of all properties have sold, right? So that says to me that we're still a market here. We're still seeing a market here that's healthy, where majority of the properties that are going to market is getting consumed by the demand, and it's still not exactly a friendly, but demand is still very much strong from that point of view. Now, if you are not buy, if you are buying right now, then I like the data. I think you can pull the trigger. But if you want to hold off and assess and check out other markets and then potentially come back to Gladstone, or you want to just wait and just sort of put a pin in it, what I would be watching is to see if over the next 2 months, so come back and look at it maybe around April, if that absorption rate continues to go down, then we can start to see a picture here, potentially coming together where absorption rates are going down, days on market is going up. So that means that potentially the demand side of the market is slowing down. So my advice to you, if you aren't buying right now and you just want to wait, come back and look at this data in 2 months' time. And if that absorption rate is going down, then certainly we might be in a market here where demand is slowing down, right? So that may mean that you might not see that aggressive house price growth we've seen over the last couple of years play out in Gladstone. Now, turning our attention to the rental side of the market for Gladstone. So I'm just going to go through here now and have a look at what it's been doing over the last couple of years, what it's done over the last 12 months, and what it's likely to do in 2025 and beyond. I know a lot of property investors are moving into this market and want to make sure that you're coming into a low vacancy environment, and also you're in a market where rents are rising as well, because that's a key part of the equation when you're coming into regional markets, is to ensure that you have a healthy yield and have a healthy vacancy rate. So yeah, your tenant is essentially taking care of your property and paying the bills. So we can see here that the median rent continues to follow the rising trend, now sitting at $467 per week for houses in Gladstone. And it's actually up $91 or 24.2% since February 2024. So the rental market, guys, here, it's had double-digit growth, just like the median house price. They've both done extremely well over the last 12 months. And that $91 per week is a huge jump. And look, I'm not surprised there, guys, because if you actually look at it, it's come off a relatively low base. So this time last year, it would have been sitting at around that, $380 per week. And that is a very, very cheap and affordable rental market. So I'm not actually surprised that it's jumped so high over the last 12 months. Now, that rental market, for it to jump the way it has, suggests to me that vacancy rates are low, and we're going to get to that in a sec. And demand is quite high from that sense. So that means that properties are going on the market for rent, and each time there's a slight increase from these property managers putting them on the market. So we're starting to see properties that were on the market for, let's say, $450 per week last year, and now on the market for $550, $530 per week right now. So we've seen that happen over time now in Gladstone. And look, I still think at $467 per week, it's still a very affordable rental market, like as an overall median. And that's a good thing for Gladstone, because I think even this rental market going forward, I still think has another 1 or 2 years of double-digit rental growth. Like if you compare it to the median rent of, let's say, somewhere like Mackay. Mackay is up there around that $700 per week. Same would go for Cairns. It's not exactly on too far behind Bundaberg and Rockhampton. So Gladstone, I believe, has a lot of catching up to do just to those locations alone. So I still think in the short term it can get to that $550 per week median. Then over the next couple of years, really push up to around that $700 per week, similar to Cairns and Mackay. So I believe there's a lot of rental growth in this market. And from what I'm seeing anyway, in the really nice suburbs, the conventional 422 brick home on 600 square meters in suburbs like Glen Eden, Tannum Sands, New Auckland, Clinton, parts of Calliope, like they're renting for close to $600 per week now, and the really good executive homes are renting for above $600 per week. So just be mindful of that, guys, that there are certain suburbs that are outperforming this median, and there are also a couple of lower socioeconomic suburbs that are probably slightly just below this median as well. So just be mindful that go in and do your own individual research. But from a rental market point of view, guys, yeah, I think this market is doing very, very well. And we're going to look at the vacancy rates now because I think it's been contributing factor to this double-digit growth over the last 12 months, and I think it's likely to have an impact going forward as well. But yeah, plenty of upside in this rental market for Gladstone. So we've just seen the rental side of the market in Gladstone have that double-digit growth over the last 12 months, come off a really low base and now pushing up into those mid fours. Now, I mentioned that a contributing factor to that is obviously a low vacancy rate environment, and like any rising rental markets, the vacancy rates are definitely a contributor to rising rents. So we can see here that the vacancy rates continue their downward trend in Gladstone, now sitting at 2.1%. This represents 85 vacancies currently available for rent right now in February 2025. So you can see there that red circle, vacancies, total of 85 vacancies, and that vacancy rate sitting at around 2.1%. Now, if you actually backdate this vacancy rate trend all the way back to 2020, we can see here that I'd say for the most part, for the last 4 years, 5 years, it's sat around that 2% mark, and it's dropped it to as low as 1.5%. And look, guys, this is interesting because despite that, like I generally, despite the vacancy rate sitting at 2%, and a lot of people will look at that figure and go, oh, 2%, Troy, that's very high, right? From a vacancy rate point of view, you want to move into markets where vacancy rates are sitting below 1%. So that's what's interesting about this graph is that despite the vacancy rate sitting around 2%, we've still seen double-digit rental growth over the last 2 years. And I think that's largely attributed to the fact that Gladstone is still a very affordable rental market, and it's come off a really low base. So regardless of what the vacancy rates are doing, rental prices keep going up, right? Because I still think even at this vacancy rate, there is still enough demand there to create that rental pressure in the market and force those rents to keep rising. I think if it pushes up any higher than this 2%, and it pushes up into 2.5, 3%, 4%, that's probably where we're likely to see a slowdown in rents for a market like Gladstone. But if it stays around 2%, I've got no problem with it continuing to do double-digit growth. But we've seen, like over the last 4 months now, it's actually trending downwards now. So that's a really good thing as well to see that trend going down. And if it continues to trend down, particularly in 2025, I think, yeah, the market is in again for another huge run when it comes to median rental growth. So yeah, all around, guys, like don't get too concerned about the vacancy rate being at 2.1%. We've seen double-digit growth regardless of this higher vacancy rate. And if it's likely to keep trending down, we're still going to see really big numbers. But overall, the rental market is still very affordable. And I think the demand levels right now, despite that vacancy rate being high, is just enough to sustain ongoing rental growth. And it has proven that over the last 12 months. But yeah, guys, this one just to keep an eye on, I think, if you are investing. And again, individual suburbs will have different vacancy rates within them as well. So you might find that one suburb might have a vacancy rate under 1% and another one might be upwards around 3%. But for the most part, like, yeah, anything around 2% or under, you're doing okay. Like you can pretty much guarantee that after a week or two, your property is going to be rented as well by someone in that marketplace. So yeah, 2% is quite a healthy rental market nonetheless. And as it moves slower, and if it starts to trend lower, then it's going to get even tighter and tighter. Then you're going to have even more rental upside, guys. But yeah, I'm happy with this one for Gladstone, guys. And yeah, if it continues to trend downward this year, it's in for another big year. Now, I'm just going to finish off by running through what the new supply pipeline looks like for Gladstone as well, because all the point in time data could look amazing, right? We could have low levels of supply, we could have extremely high levels of demand, but that means nothing, particularly in the short term, if the market becomes inundated with a whole bunch of new supply, right? Supply is the enemy of capital growth. So I'm just going to have a look here now at the supply pipeline for Gladstone. Then what does that mean for you as a property investor in 2025 and beyond? So we can see here a total of 174 new houses have been built in Gladstone throughout the 2023 to 2024 financial year. So 174 new houses. So guys, that represents what? Around what would that be? Around 2% of new stock when it comes to overall supply levels in Gladstone. So you have a total of 2% ongoing increase in the last financial year. And look, guys, for me, that really overall around that 2% is not enough to move the needle when it comes to being a supply threat to create an inundation in the marketplace to slow down the property market from rising, right? I still think that 2% or 174 houses being built is very, very low levels of supply. And I think most of the country, Gladstone is experiencing, the construction pinch as well. Like they don't have any big volume builders or developers in the area. It's generally small and medium sized builders uh, that are pumping out these house and land packages for home buyers in these areas. So yeah, I'm not too concerned about that, guys, going forward. I can't really seeing it being a threat. It's when those new supply percentages push up to around that 10% mark or 15% or even around 20 is when in a market where there is a whole bunch of new supply in the pipeline. So for it to sit around 2% and only produce around 174 new homes, and I would say out of that new supply, what you're probably looking at 90% of that anyway going to home buyers, and only a small portion are being available for rental stock or investor stock, then it's not really a big issue going forward, guys. So yeah, I think overall I'm really happy with what I'm seeing here from a supply perspective. I think you're not in trouble if you are looking to invest in Gladstone, and you shouldn't be too concerned about any future supply threat based on this data right now. Now, obviously, uh, this could change, like the 2025 financial year or the 2025 or 2026 financial year could change when it comes to approval levels. So no one has a crystal ball in relation to what's going to happen here, but all we can really look at is some of the lead indicators around building approvals and also things like how active certain developers are and home builders and how healthy the construction sector is at that particular point in time. But for Gladstone, all of those particular areas are looking pretty grim, so I can't really see that pipeline being beefed up too much in the immediate future. All right, guys, the finale. So I'm going to finish off now just by talking through my predictions for the Gladstone property market in 2025. Now, just revisiting the key points that we've seen as part of this update today. So when we looked at the supply side of the market, we pretty much established that supply is trending very, very low, and it's going close to the lowest it's ever been over the last 4 years in Gladstone, with those listing volumes as well as really tight and contracting inventory levels. Then on the demand side, we've seen a slight slowdown when it came to absorption rates. Like the absorption rates weren't exactly the same as what they were 12 months ago. And we've started to see a small spike in days on market. So that is suggesting that we might be seeing a little bit of a slowdown when it comes to the demand side of the market. So that's very interesting. When we looked at those two sides of the market, we were able to establish that supply is low and demand is potentially cooling. But what does that mean for 2025 and beyond? Well, my prediction is that if supply continues to tighten, I think a small slowdown in demand is not going to really matter, right? So my prediction for the 2025 year is for Gladstone to experience a very high single digit capital growth rate. So basically all I'm saying there is that as supply gets tighter and tighter and demand tapers off a little, then nothing really changes, right? It's only if demand starts to really fall off and supply starts to go up is when I start to see a potential concern there that the market might potentially slow down or go backwards. But because supply is continuing to go lower, then to me, I still think that's enough to sustain at least high single digit growth for the 2025 year. Now, when it comes to the rental side of the market, what we were able to establish there, that Gladstone came off a really low base over the last 12 months, sitting at around $370 per week, now pushed up into the mid 400s. And overall, based on that, even though it had experienced double digit growth around that $91 per week, it is still a very affordable rental market, particularly when it's benchmarked compared to its other regional hubs. Still very cheap and has a lot of rental upside. Now, what I've suggested for 2025 is that if the rental market will tighten to around 1%, and we've started to see that vacancy rate trend down. Now it's sitting at around 2% now, but if it starts to trend down into the ones and then it moves closer to 1%, we will continue to see double digit growth, not only in 2025, but in 2026 and 2027. I still think the median rent can hit around that $750 per week in Gladstone if these vacancy rates continue to trend down. And then when we looked at the new supply pipeline, like that's not really going to move the needle at all when it comes to median house prices and median rent. So all round, like the the ingredients for ongoing capital growth and rental growth are looking pretty good for Gladstone here, guys. And guys, I'm going to finish there. So thank you again for tuning in today. My name is Troy Simbassini, owner and head of research of Life Buyers Agency. We help property buyers navigate the regional Queensland property market by mitigating their downside risk and maximizing their upside potential. If you feel as though you need help navigating a market like Gladstone, we get a ton of off-market properties we buy in some really nice suburbs and pockets of suburb streets and properties. That's our job and duty, is to nail the best assets in the marketplace. If you feel as though you fall into that category, visit us on that website or give us a call on that number and book in a consult with either myself or one of my team members. We'll be happy to help. But anyway, guys, thanks, family. Appreciate you for tuning in, and I'll see you on the next video.